Hi guys, welcome to another honeystocks.com weekend analysis, and this one's going to be going out on Memorial Weekend, the 24th of May 2020. Now, the market is obviously at a bit of an inflection point at the moment, but before I get into today's charts, which is why you've all kind of tuned in, I guess, I don't want to really talk too much about the economy versus the stock market. I think that's been beaten to death, and I don't want to bore anybody here. But one thing that I am obviously aware of and conscious of is the amount of requests that I'm getting for charting, etc. I think that the first place to really stop off here is to really just say that the presentation that you're about to watch isn't geared towards day trading. If you're a day trader, you can probably just switch off now and go and watch a get-rich-quick scheme on YouTube or on social media somewhere else. The charts that I'm presenting have a time horizon of weeks, and if we have a particularly good trend, hopefully months. So that's the charting that I provide. It's all very logical, it's all geared towards technical analysis. I don't really look at the economical factors, I don't look at the balance sheets of companies, etc. So again, those of you that are interested in that sort of thing, you can probably just switch off. But if technical analysis is your thing, then feel free to continue watching. I have around 5 minutes of overall market observation, and then I've got about 20, maybe 25 actually, individual stocks with entries that I feel like should be on the radar for the forthcoming week or two. Now, as always, for those of you that follow my social media, you all know by now that I reserve the right to change my thesis on 30 seconds notice. And something that is apparent this weekend is there's obviously quite a lot of news coming out of China, Hong Kong, etc. How will that impact the markets on Tuesday when the markets open? I've no idea. Nobody knows. Anybody that tells you that they know, you should just stop following them, because the default answer is nobody knows. So let's get into the charts. If you do get some value from this in some way, this presentation takes 8-9 hours to put together, to edit, to get out to social media, etc. I'd really appreciate a like, a comment. Let me know what stocks that you have on your radar for the forthcoming week, and it'd be very much appreciated, because I do this for nothing. So yeah, let's get into the charts. Stay safe out there, and if you don't make it to the end, please keep up with the social distancing if that's your thing. So let's dive into the charts. So there should be a little switch up in audio here. I've just switched over to the microphone, so might want to adjust your volume. Now, before I get into the charts, most of you know this off by heart now. Important disclaimer, there's not any investment advice. Any information here is just that, it's only information. Do with the information as you wish, but there is absolutely no recommendations whatsoever, and do not listen to a word I say. Now, most of you know this already as well. I'm registered with the CMT Association, currently working my way towards my chartered status. Technical analysis is something that I'm widely known for, and hopefully you get a bit more technical insight into the market. And if you do get some value, as I said, please subscribe to the channel, give it a thumbs up, give it a comment. It all helps with the YouTube algorithms. So where I'm going to start off this presentation with is the relative rotation graph. Now, this might be new to many of you, but it's a tool that some software providers provide. I obviously use Optima, but we have improving sectors, leading sectors, weakening and lagging sectors. Now, for me, I'm primarily looking for strength within the market. I'm not really looking to buy a lot of the beaten up stocks unless it makes a lot of sense to do so. For me, it's really about identifying the strength. And where's the strength at the moment? Well, we know biotechs are obviously breaking out. For those of you that maybe picked up my chart on StockTwits a few weeks ago, it was featured as their chart of the day, I think it was. And you know, biotechs are breaking out. You would have to be living on Mars to not realise that obviously tech is massive. We've got the cloud ETFs, we've got the technology ETF, XLK. But I'm also looking to pay attention now. The marijuana index is starting to move, it's improving. We've got energy, obviously beaten to death over the last few months. It's now looking like it's starting to make a comeback. And the whole premise of the rotation graph is that sectors rotate. Sector rotations are very, very real. So the expectation is that this now starts to move into improving before starting to move into leading. It's not a standalone tool, it's not a guaranteed predictor, but it's something that we can use as a data point. For instance, we can see that gold is starting to move into a weakening level. We've got the Treasury Bond ETF, TLT, starting to weaken as well. So for me, it's just about identifying the strength and not overcomplicating things. Now, to the other side of that, just a couple of the major indices. This is a chart that I've highlighted over the last few weeks with our client base, that the market is really in a sideways grind at the moment. When we're in a sideways grind, again, we just have to identify the strength within the market. But I'm paying very, very close attention to this level here with the Dow. I would like to see a breakout here in the Dow to give us a little bit more confirmation that the market rally will continue. The next chart that I'm going to be going over here is the S&P 500 is very, very important. But it does concern me a little bit that the Dow can't get above 60 within the RSI. So we need to have a confirmation from the Dow, which in my opinion is the most important index in the planet. Yes, we've got the S&P 500, but the reason why the S&P 500 is very, very important at the moment is we're now pushing up against the 200-day simple moving average, which is an important level for any stock, any index. And what happens here will give us the direction for a short-term move in price. Now, again, I'm not going to get into the discussions about whether we go and retest the bottoms, whether this is a V-shaped recovery or not. For me, it's more about identifying the individual stocks rather than, observing certainly what the overall market is doing. But I do see, obviously, signs that the market is doing well under the surface. We've got the percentage of stocks trading above their 50-period simple moving average is at 81% at the moment. That's not a bearish signal. But again, it does concern me a little bit about the RSI. I would like to see RSI reach an overbought condition, because an overbought condition, despite what some of you might think is a sell signal, it's actually tells us that the market is trading in a specific direction, because if we have overbought conditions, it means the market is in an uptrend because it's a characteristic of an uptrend. And that's something that's lost on many. So I would like to see us move through the S&P 500 simple moving average, and I would like to see us have a little bit of a breakout in the Dow. To illustrate how serious obviously the crash has been, it's obviously on a par with the crash of 87, the financial crisis. This is a percentage of stocks that were trading above their 200-period simple moving average. Now again, we are starting to see slow signs of recovery. We're now up at 31, so 31% of stocks in the S&P 500 are now trading above their 200-period simple moving average. Naturally, I would like to see that get up to 50-60%. We've just not had the participation, shall we say, from many areas of the market within the S&P 500. There's only 30% of stocks that have started to move. So again, that is a little bit of cause for concern. But as I start to go through the individual stocks, you'll understand that we just have to go. If you're looking to buy, you want to be buying the stocks that are going up. Tech is very, very close to breaking out into all-time highs. Again, I do have my eye on the RSI here. When we reach new highs, if we reach new highs, we would need to have RSI move higher than its previous peak. Otherwise, we would have a momentum divergence, and that in itself is a bit of an issue. Gold has obviously been a big one over the last couple of months. But again, I'm paying very, very close attention here what happens with gold. Historic safe haven asset. If we have a breakout in gold here, what would that mean for the individual stocks aligned with gold? And we're talking about the gold miners here. So Very, very close eye on gold at the moment. Do we break out? Do we get a rejection? Let's see what happens. And last couple of charts with the overall market, of keeping an eye on the global 100 index ETF. I think if we can get a sustained breakout here, then that would translate into a bullish move in global equities, which in of itself should then translate to the US, UK markets, etc. So I'm very much looking for a breakout here and for a sustained move in the global 100 index. Now, for those of you that reach out to me every time I post a volatility chart saying technical analysis on volatility doesn't work, all I'm going to say is this is a breakout. It works. So what I'm keeping an eye on here with volatility is if we get a breakout here with volatility to the upside with the inverse correlation with the market, that means the stock market is likely to go down. Whereas if we have a breakdown, it means volatility is lowering, which translates generally to a slow rising market, which I will take any day of the week. I don't like volatility. I'm much happier when it's not in my life, and that's really how I'm looking at things at the moment. I'm keeping an eye on the volatility measure, and I'm using VXX. Some of you might use the VIX, but for me, I'm keeping a very, very close eye on volatility. It is slowly reducing, which, as we've seen over the last month or two, has equated to a slow rising stock market, which is obviously nice. So individual stocks, which I know is why most of you are following. Now, as I said right at the start, this isn't geared towards day trading. Yes, I'm going to be highlighting lots of optimal entries, but again, I'll leave it up to you guys to look at the fundamentals and whatever it is that you like to do. But if anybody has any thoughts, questions, comments, feedback on any of these charts, if you think it's nonsense, then tell me. But don't be one of those guys or girls that sends me abusive emails, because it's not cool. So AYX. Now, AYX is very, very close to breaking out above previous pivot level from March. So I think if we can get a breakout here, we know as I highlighted at the start, the cloud tech companies are obviously booming at the moment. Anything that seems to be aligned with working from home and technology based. And for me, it's logical. I mean, AYX is a chart that's been talked about a lot on this breakout, and it's had the continuation, and long may that continue. Netflix, I think we can be bullish above 420 here. Again, we have to understand that obviously the profile of the stock. We know when we look left on the chart that Netflix effectively went nowhere for a long time. Yes, it's had a good bullish run recently. I think perceived as a bit of a COVID play, if you like. But again, for me, it's about risk to reward proposition. I don't like to take any chances as soon as we start to break down below key technical levels. But I think you can be a buyer of Netflix provided it's above 420. I think below it, I wouldn't be wanting to take any chances that we start to rapidly drop. So yeah, that's my view on Netflix. Zscaler is looking like it's close to a breakout. For those of you that don't know this already, our subscribers and clients got a trade alert on this at 70. It's obviously been chopping about sideways, doing nothing for the last couple of weeks, but oftentimes patience is rewarded. Ultimately, I do see a 15% upside move if we can get this breakout here, and I think it starts to move towards 90, at which point we then evaluate our position. Apple, very, very close to breaking out here. I think we're moving up towards 330. Again, we've had a recent breakout, it's retested and off it's going. So Apple, I would suspect, is likely to go and test all-time highs, at which point this becomes a very key level. There's likely to be a bit of selling pressure, people taking profits, etc. So I would be keeping a very, very close eye on this 325 330 level. Same can be said for Microsoft. I think I wouldn't want to be taking a buy position right now. I don't think it makes a lot of sense from a risk to reward perspective. Yes, if you take the view that Microsoft is going to blast off and start hurtling its way towards $300, go and buy it. But again, observing the technicals for me, I want to see these key technical levels clear, because I don't like buying in a stock and for it to meet resistance and then fall away and then for it to chop about sideways for 6 months. I'd much rather have the knowledge that we've cleared the hurdle, because then it's generally a smoother ride to the upside when we get these breakouts. So again, I'd be keeping a very, very close eye. If you're in there at 190, I think would be an evaluation point. American Airlines, probably the most hated stock on the planet at the moment. I think airlines is an area that I am now probably steering clear of. I think with the news that we've maybe had this weekend about bankruptcies for huge companies like Hertz, which I think is filing for bankruptcy. At least that's my understanding of the news this weekend. I'm not saying there's bankruptcies in American Airlines future, but it does make me ask the question, do I want to be buying a lot of these perceived discounts? Yes, I understand American Airlines has found a support level. I actually did really well in this stock. I think it was 5 or 6 weeks ago now. But I think for me now, yes, we've got a support level, but I do worry if we break below this long-standing support level dating back to 2008. I'm personally not a buyer of American Airlines here. Doesn't mean that that's a correct thesis. Those of you that are buying it, good luck to you. I hope it makes you lots of money. But until we get a little bit more stability with the airline travel, etc., I wouldn't be a buyer of airlines at this exact moment in time. Alibaba, again, I've had to rebuild my chart for Alibaba this weekend, just purely, I think, for the fact that there's obviously big news coming out of China. From what I understand, because I have many clients that have long-standing positions in Baba and love the company, I believe it was blowout earnings, really good earnings. It's not a bad company just because the stock price is going down. It's probably offering opportunity. But again, I think when I look at the technicals, I'm really looking to just say at which point, I'm just saying, right, I'm done. And for me, I'd be keeping a close eye on this chart. I think if we get a breakdown here, yes, you probably can buy the dip, but I think this would be a level around 170. If it gets to 170, that I'd be keeping a very close eye on. I don't know if it's going to go to 170. I don't know if it's going to have a breakdown here or rebound, but for me, that's what the chart currently looks like at the moment. Beyond Meat, I think, seems to be building a bit of a base here at the moment. We've had a recent breakout. Again, this is one that a few of our clients and subscribers have done very, very well on recently. But again, like a lot of stocks in the market at the moment, just chopping about sideways, not doing a whole lot at the moment. But is it consolidating with a view to moving higher? That's probably the bet that I would be making at the moment if I was to make a bet on Beyond Meat. I've been asked about it this weekend, so it's included in the analysis. But I think provided that we're above that level at 125, I think you can still remain bullish on Beyond Meat. Now, obviously, for those of you that maybe don't pay attention to the overall market, there's maybe a lot of you that are fixated on your individual stocks that maybe you're married to. The philosophy that I have is that I'm only dating these stocks. I'm never marrying them. And I think when we look at areas like silver miners and we look at Pan American Silver Corp, as a chart, I mean, that's a very appealing chart at the moment. We've just had a recent breakout here above 26. So I think as long as we can sustain this move, hopefully we get a bit of continuation on this on Tuesday, Wednesday. But again, this is a chart that many of our subscribers and clients are doing very, very well on. We sent a trade alert out for this at 23.50 when we got this breakout here, and it's doing very, very nicely. So this is a chart that I'm super bullish on, and hopefully the trend continues, and it can hopefully help to make some of you some money if silver miners are your thing. At Home Depot, very, very similar to a lot of charts like Apple, Microsoft, etc. Obviously, this is aligned with the Home Builders ETF, which has been on an absolute rocket ship recently. We are approaching very, very key level here. It's already rejected its previous resistance. So we're just looking for that technical hurdle to clear. Above 250, I think, would make a lot of sense. But again, I think below this level, I think you're going to have some selling pressure. It's going to have some hurdles to get over the hump, if you like. But I think I like Home Depot above 250. Now, DocuSign is a stock that's obviously aligned with a bit of a COVID play. Again, it's been on an absolute tear recently. Congrats to everybody that's maybe currently holding it at the moment. I know there's probably many of you that have come through maybe from stock twits here. So we've had a huge move recently. We've just moved above the 261 extension. Logic tells us that it's now going to start to hopefully move towards 175. For those of you in there, I think it makes a lot of sense now to use 121 as the level to say, if it moves below that, then, thanks very much, Mr. DocuSign, on to the next one. But again, I think you can still remain bullish on DocuSign at the moment. Given the overall kind of, look of the chart, I mean, it doesn't take Columbo, I might be showing my age there, to see that the chart itself does look a little bit overextended. We've got RSI sitting up at 77. We would anticipate a little bit of a pullback, but provided the 121 level holds, that pullback will offer further opportunity, maybe like adding to your position and compounding. But yeah, I think at the moment it makes a lot of sense to be bullish on DocuSign still. Starbucks, watching very, very closely for a breakout here above $80. I think for me makes a lot of sense. We've got CrowdStrike. I was asked about this weekend. I think it's starting to move towards $90. Again, we're just looking at these technical hurdles. As soon as they've been overcome, you just use a stair-step method. And again, you're just effectively managing it to profit at the moment. Nike, I think we're descending trend line here. I think if we break out here, that could well be a catalyst for further momentum to come into Nike. We've got IRBT. Now, this is an interesting one. For those of you that maybe caught my last analysis, I think 3 or 4 weeks ago now, I actually highlighted iRobot as a stock to maybe consider buying on this breakout. We got the breakout, and things are doing exactly what we're expected. So I think the reason I'm highlighting it again this week is that I think any pullback that we get here, RSI is massively overbought at the moment, so we would expect and anticipate a little bit of a pullback at some point. Whether it happens next week or the week after, stocks don't go up in a straight line, unfortunately. It would be lovely if they did, but I think any pullback that you get into this, I think, is an opportunity. You just need to observe the technical levels and make sure we don't break back down below these key levels. NVTA, this is a chart that was actually shared with our clients this weekend, and just looking at the chart here, we can clearly see what happened last time. It had a move above the 200 period moving average. When you look at the kind of chart, the price patterns here, they look very, very similar. So that's why it's on the radar, and I think if it moves above the 200 period simple moving average, I think there's a lot of opportunity there. Disney, I was asked about this week. Not a lot to really say about Disney in terms of a new entry, but what we can see is if the economy is opened up in the US, obviously, I don't know what the theme park's going to look like. I mean, I've been to Disney World a couple of times in my life, but I get the feeling things will look a lot different. But if we observe the technicals, We've got a rising 20 period simple moving average. That's always a bullish signal. So I think you can still be bullish on the stock at the moment, but I would be keeping a very, very close eye here on that 200 period moving average. See what happens there with price. Again, you can use some technical tools to just help you stay in the trade. But again, this is the level that I'd be keeping a very, very close eye on. Zinger, again, I highlighted this one a few weeks ago. It's moving beautifully at the moment, doing exactly as expected. I'm not saying it's a great company. I believe they do some sort of mobile gaming. That's about the extent of my knowledge. But again, it's moving very, very nicely at the moment. I think it's starting to make its way towards $10. Yes, we're going to have pullbacks along the way, but I would like to see it reach over bought conditions, because that would be a characteristic of an uptrend, and I think we can continue to be bullish on Zinger at the moment. PayPal, gap up on positive earnings. We've had breakout, we've pulled back, we've not filled the gap. I said a few weeks ago that I wanted to see this level hold. That's exactly what's happened. Again, if you're out there and you're holding PayPal, you can use stair-step methods. And I think now that we're above $150, I think that the thesis now just has to be we're bullish above 150. I think if the round number psychology kicks in and we get a rejection, I wouldn't want to be losing any profits there. So I'd be keeping a very, very close eye on this to see what happens. I think if we break below this, I wouldn't want to be giving up any profits here. Square Inc. looks like it's looking to break out here above $80. I know there's many of you out there in Square that have been frustrated because it's done nothing for a couple of years. Hopefully there's light at the end of the tunnel here. Hopefully we start to move towards 87 and then off to 100. That's the hope. For me, I would potentially look to buy it if it can clear above $87. I think this is going to be an area of interest, as this level is for me. I think this is a very clear resistance level. So if it can clear this hurdle, there's only 2 more hurdles for it to go before we get back to testing all-time highs. I'm rooting for you, Square guys. I do like the company. For me, I'm just waiting for the right time to buy it on a technical level. Congrats those of you that use fundamentals. It's not my game, but technicals, I'm quite happy to buy it up here. Moderna, obviously a lot of interest at the moment given the controversy, I think, with its vaccine and the timeliness of the announcements, etc. It's hard to be bearish on Moderna. We've had a breakout recently. It's one that many of our members have done very, very well on recently. So again, you're just looking to build in technical levels. It doesn't have to be complicated, guys. This is something that's lost in everybody. I think everybody thinks technical analysis has to be minute time frames and hourly time frames and very, very complex, but it really doesn't. So that's really how I see Moderna at the moment. I think we just look to see when we get these dips that these key levels are respected, and hopefully all that's happened there is that we've filled the gap and we start to move higher. Now, for disclosure, this is a position that I currently hold at the moment. We had obviously a breakout recently, quick 40-50%. We've come back. We know that with breakouts, they quite often retest those breakout levels. That's all I've seen at the moment, and I've been a buyer of this since we got a support here and a move off the $10 level. So for those of you that are maybe looking for a position in INSG, I think the levels here at $11, at $13.50 would make a lot of sense on a technical level. So that's my thoughts on INSG. Trade Desk looks like it's very similar again to a lot of charts. We're looking like we're going to test its previous highs again here at 325. And I think if it can break out above 325, I think it's then a clear run to the upside. And given, I think, from what I believe, the fundamentals of the company and what they do, etc., I think that would look very, very good for Trade Desk. Facebook have been asked a lot about this weekend. Recent breakout. Again, I wouldn't want to be buying here when RSI is up at 77. I'd be looking for a bit of a pullback, a retest before it starts to move off again. Again, a lot of you will be asking yourself, why wouldn't I just buy it here if I think it's going up here? And the reason for that is the mental hurdles. If you go and buy it at 340 and it pulls back to 320, if you're a trader and maybe you're holding options, etc., that's a big mental hurdle to overcome. So I'm constantly looking for what I would deem to be the optimal entry. It's what I consider to be one of my edges in the market. We've got high RSI, we've got excellent relative strength with Facebook, as you would expect, but we've also had a volume spike on the breakout as well. So it meets the criteria essentially for taking a breakout, but I wouldn't be buying it here. I'd be looking for a retest if I'd missed this breakout. CDNS, I think, has broken out again. We're bullish above these levels. We're using technical tools to keep us in the trade. So we're looking for a pullback here, and we're moving off to the sunset, hopefully. We've got Magna International. This was a request this weekend. I don't see what I can really talk about with the chart. It's not a great looking chart. I'm assuming it's been bought for valuations. The only real thing I can really say with the technicals here, we've got a rising 20 period simple moving average, but when you consider some of the charts that I kind of look at, it wouldn't really meet the criteria for me personally, but that doesn't mean the stock isn't bullish. I hope MGA works out for anybody that's got it, but for me, MGA, it's not massively appealing at the moment. Teladoc, again, I think we have to be bullish on Teladoc at the moment. Again, it's a request this week. I was having a play around here. Sometimes technical analysis on a chart isn't really, it doesn't work a lot of the time. So you need to be selective, certainly with entries, etc. Yes, it's in a long-term structural uptrend. I think that's all I can really say about this chart. Teladoc, price is moving up. Don't fight price. I wouldn't be shorting it, but it looks like RSI has pulled back a little bit. We've got really good relative strength to the overall market, so hopefully it's just building a bit of a base before moving higher. I don't see an optimal entry at the moment in Teladoc. It's obviously hit $200 and rejected in the past, so hopefully it's now starting to move its way back towards the $200 level. Now, Amazon is obviously one that I get asked about all the time. Now, $2,500 level, okay, so round number barrier, possibly, but I think what I wanted to really highlight here is, so Amazon, if you look at the chart, and this is kind of what I do, I like to look left on the chart and then use technical analysis just to facilitate better decision making. I obviously don't use the magical hindsight indicator that I see banded about the internet from everybody, but when we look left, we can see that this is a poster child for Fibonacci. Obviously we had rejections here at the $2,000 level. So we've had a recent breakout. Now, this is one that many of our members are doing very, very well on both stock and options. Long may it continue. Ultimately, I do see Amazon moving towards $3,000. I think that's, I'm not going to break the internet with that thesis, but obviously we have to overcome these significant psychological barriers on the way back up. So, for me, yes, we're still bullish on Amazon. I've been bullish since this breakout. Again, I probably posted this chart to social media somewhere. But yeah, I think we have to just wait for that $2,500 level to clear, and then I think it's plain sailing up to 3,000. Again, very similar chart for Nvidia. I think we're now starting to approach 389, which would be a logical level to meet a bit of resistance. I think if I can get over 389, I think it goes to 629, which I realize is a massive jump. But again, I don't understand. I don't know why ancient mathematics works with the stock market, but Fibonacci absolutely works. And when you actually dig in a little closer and zoom in on these charts, you can see that when it hits these levels, it does tend to kind of chop about sideways for 4 to 6 months. And, you know, so I would be keeping a very close eye on this level around 390. MasterCard is moving through the gears nicely. It's pulled back. We've just moved above the 61.8 Fibonacci level. So again, I think you can be bullish above this level. I think it would probably be offering opportunity above 290. But obviously, I think we ultimately see MasterCard moving back to 350, provided the overall market conditions are favourable. For disclosure, I have a long-standing position in OK at the moment. Again, for those of you that are in there, I'd be looking at these levels here. I know it got a recent downgrade this week, which was a little frustrating from JP Morgan. Again, it didn't freak me out. I'm still okay with the biggest investment banks in the world downgrading my stock. And that's ultimately how I see OK at the moment. I think we're obviously bullish. I'm bullish. I'm just looking to see these levels clear. And I think above these levels will probably offer further opportunity if the stock continues to do what I hope it will do, which is make me 150, 200%. Boeing, I think Boeing makes a lot of sense. I think we've broken out. I think we've now moved above the 50 period simple moving average. We've got a 20 period simple moving average, which is now starting to rise. But Boeing, yes, it's a massive perceived discount. But again, going back to what I was saying earlier about the airlines, there would need to be a little bit of caution there, I think. But again, I think you can be bullish on Boeing at the moment. But again, happy to revisit that thesis on 30 seconds notice, as I said at the start. And last up, we've got Roku. I've been asked about this weekend. We've got declining momentum. So we've had a pullback. So for me, it's about observing what happens here at the 50 period simple moving average and below $100. If it can rebound off $100, you could look. It'd be more of a swing style trade. It's a stressful stock. I'm never in my existence going to trade Roku. It's way too stressful, too volatile. I like nice smooth cleanup trends, and Roku is anything but that at the moment. I understand it did very well in the past, but for me, I'm not touching this one. But offers opportunity if it pulls back to 100 and rebounds, I think. But I think all bets are off below $100, and that's pretty much how I see Roku at the moment. So if you've had any value from that, guys, as I said before, please subscribe to our channel. Feel free to give it a like, give it a comment. But if you're somebody out there that does struggle a little bit with technical analysis, maybe you don't have the time to go through hundreds of charts every week like I do to identify the best charts, the best setups, etc. A lot of you will understand that I've stepped away from a lot of my social media stuff over the last couple of months. Now, the reason for that is our membership at honeystocks.com has been full, and I've had to step back to assess my workload to help, obviously, the charting, support charting, etc. So what I've done over the last couple of months is really just assess that, and I've made decisions along the way as to whether or not I'm prepared to open up the membership again. Now, a couple of weeks ago, I opened up the membership again, opened up for 10 new intakes. I don't have any grand plans to be the biggest trading community in the world. I couldn't think of anything worse. I'm not in this for the money.
I'm comfortable. I just like to have something to do on a day-to-day basis to help me pass my time so that I'm not bored to death. I'm sure most of you can appreciate that. But what we provide at honeystocks.com is we have 1 year access to all our trading ideas, our scans, our trading community. So if you're somebody out there that would like to be part of a community, be part of my platform, we are providing full access still to our technical analysis program, which we charge a lot of money for. Since the new year, we've included it as part of our membership, and it's obviously had incredible feedback, etc. But if you're somebody out there that maybe would like to pick up technical analysis, be aligned with a trading community, etc., I'm very, very unique in what I do because I'm very, very transparent about my work. This is what a trade idea looks like. This is a recent alert that went out for Barrick Gold above 2350. I've done very, very well on it recently. So, that's one trade alert. Pan American Silver, as I said, I don't use the magical hindsight indicators. I date stamp all my charts, and I'm highlighting in advance before the breakouts occur, and that's helped me navigate a very, very tricky market. There's Zscaler again. That went out on the 5th of May, above $70, risen to 80. It's consolidating as I've shown before. But another massive part about what I do is I provide support charting on a day-to-day basis, which is where the bulk of my time is really taken up, and why I've had to step back and taking on new members, because I'm providing charting to our members like this. This is Twilio when it had it break out above $100. This is now up at $210, and as you can see there, timestamp 16th of April. So if you would like to be part of what we do, we are going to be opening up our membership until Monday, the close of play on Monday. I think I'll close the membership again, but go and have a look and see the types of charts, the stocks that we recommend. Again, very, very open about this. Every single trade idea that I have ever put out to my community, I log on my website. I wish everybody would do this. Nobody else does this. So go and have a look, and if you feel like it's a community or the charting, the stocks align with your thought process and what you want to accomplish, feel free to register your details. We've had some utterly incredible success stories. Mike made it to 6 figures. We had Ganesh making $40,000, Peloton J 30%, Jamie 150%, 50% account growth at the start of this year. Now, just to put that into context a little bit, the market obviously crashed. Now, once the market crashed, I had to reach out to all our members to figure out who had been listening to my analysis, because a lot of you won't know, but before the market crash happened, and you'll never see me going onto social media to say, I called the crash, I did this, I did that. But what I am going to do is link the video to my analysis that I provided my clients in the weeks leading up to the crash, so that you can get a better feel for exactly what it is that I do. And 76% of our members listened. They got defensive ahead of time, which is an utterly incredible result. Again, I want to be very, very open and transparent. 76% of annual subscribers get defensive ahead of the crash and ultimately not lose their 401ks, not lose their trading accounts, and to be able to profit on the back of it is utterly incredible. So that's what I do at honeystocks.com. So if you're trying to fit trading around a career, a business, maybe you're trying to get away from day trading, maybe you want better consistency, I think we're probably a good place to be. Maybe you want to learn a new way, get away from your old bad habits. I don't know what your deal is, but I'm sure we can probably help in some way. But if you've stuck around to the bitter end here, thank you very, very much from the bottom of my heart for watching. Stay safe out there, social distance. It does help, and good luck with the markets, and maybe we'll welcome you soon. Thank you very much.